Hey, what's going on, everybody? Thank you so much for joining me for a new episode of Crypto Currently. Of course, I'm your host, Justin Wise, joined today by the one, the only Bitcoin Trading Challenge, Bennett. What's going on, man?
Second time.
Yep. Sorry, you were muted there for about half a second, so I got you fixed now. All right. Hopefully, listen, guys, in the chat, if there are any problems with the video, with the audio, of course, let us know. Direct all death threats and comments to I don't know, some other popular YouTube crypto channel, just not ours. So hope you guys are having a fantastic evening, man. It is Sunday evening. We are going to be witnessing the close of the weekly candle, the daily candle, and all in between here in about an hour. So we'll be live to comment upon that. Interesting time in the market. Let me actually get my chart pulled up for us. And then I think we're going to spend the majority of today going over some interesting comments. I know, again, we had a very good show the last time that we had, let's see, XBT 19. We had a very good show the last time that we had Bennett on. A lot of people asked for him to come back on. So here we are, especially at a very critical time in the market like this, when we seem to have everybody confident. We've got 50% of everybody confident that we're going to 4,500 right now, and 50% confident that we are hanging on the verge of a drop back down to 3,100. So with that being said, we will just start off with, we've got Bennett here. It's a good time. It's a good time for the guest, man. So if you guys have any questions, feel free to drop them in the depth supo, man, Rob Taylor says. Oh, my dear Lord. So we're going to take some time here, I think, with Bennett and just let him break some stuff down. Again, if you guys have any questions, feel free to throw them in the chat, man, and we'll get to them as soon as we can. We've got a little bit of the schedule here. We are going to look at Bitcoin. We're going to take a brief glance at the spider by popular request, of course, Ethereum. And then we're going to get into the meat of tonight's conversation, which is going to be gravity, supply and demand runs, order depth, and open interest, which are the latest topics that Bennett has commented on. So where do you want to start? Do you want to share your screen, Bennett, and maybe take a look at Bitcoin for us and tell you what you think we're up to?
Yeah, let's share the screen, and we will go to the good old trading view. So you can see that fine?
Yep, everything looks really good.
Yeah, so I think you've probably done a lot of recaps like this, but we currently had a pretty strong bull run. We had consolidation with a few shakeouts here and here, and both of these shakeouts did have a loss in open interest. And to piggyback off what you had said about open interest, typically when open interest drops, that means that traders are closing positions, meaning that many traders are probably taking a loss, getting stopped out, or getting liquidated, or panic selling. And that's typically a good sign that the price is going to move up. So we had two drops in open interest that shook out the longs, and then we see this nice bull run here. And one other thing that happened as well is, as I had talked about it in my chat, we had a slight cross above 4,000, and then we went back down. And the reason this happens is because of how many stop losses of the shorts were placed just above 4,000. We had a psychological round price level. A lot of people put their stop losses just above 4,000. That was triggered on high volume, and then price went, back down. And if you guys are wondering what are the main indicators that I've been using since the last video we did, I have two, basically my bread and butter, which are the BAS and the MDR. And I think, Justin, you've talked about those two before a few times.
Oh, yeah.
Oh, yeah. So the first thing that I can show you guys is BAS. This is the bid-ask sum, and I look at this like every 5-10 minutes when I'm actively trading. So what we're looking at here is the 5% range of BitMEX, XBT USD. So that's going to show us the bids within 5% of price and the offers within 5% of price. Now, if we take a look at the 7-day, we can actually see green is bids, red is offers. So green is limit orders to buy, red is limit orders to sell. When we see more limit orders to buy than limit orders to sell, price tends to go up. What do we see here? Well, March 11 to about March 14, we had the bids were dominant over the offers, over the asks. At the peak, we had about $129 million worth on BitMEX of bids within the 5%. And at that same point in time, we actually had only about $104 million worth of offers. So more people wanted to buy here than people wanted to sell. So what did price do? It rose because more people wanted to buy, so higher demand, and we could see it rose and it continued to rise. with this. So that's the first indicator I look at. Just look at the BitMEX order depth. And the second one that I like to look at is the global MDR on 5%. So what this shows us is all cryptocurrencies of how many markets? 5,745 different cryptocurrency pairings added together of all the bids and of all the offers. And if you notice here, that same time frame that we were just talking about, March 11 to March 14, you can see here that the bids were higher than the offers just about the entire time, as you can see here. So when we had a global MDR that was very bullish, and we also had the BitMEX BAS that was very bullish, the uptrend was very, very likely to occur because of how many people wanted to buy. So that's just the quick look at what had happened before. Now with predictive and where I see Bitcoin going now, well, we currently we still have a bullish MDR, meaning that demand is higher than supply across all cryptocurrencies that are not futures like BitMEX. So just spot, Binance, Coinbase, Bittrex. So it looks pretty bullish here. If we take a look at the short-term order depth for BitMEX, you can see that it actually is a bit conflictive. If you guys can see, we actually have more offers here than bids. So typically when we have this mismatch, we have more offers than bids on one site, BitMEX, and then more bids than offers on the other. I don't love taking a trade because I like to see these indicators in confluence like they were March 11 to March 14. So right now, I would say the 5% looks a little indecisive. We can also go to the 1% for very short-term order depth, and that also looks a little bit bearish. So right now, my prediction, if I was forced to make a prediction, I would say short-term, I'm a bit more bearish. I think medium-term, we may get another shakeout or another leg up, and that might be just past 4,000 to trigger any other stop losses the traders put just above 4,000. I've been talking a lot, Justin. So what are your thoughts on that? What are your thoughts on the order depth looking at here? And what are your thoughts on those stop loss placements that I was just talking about?
Sure, man. I'm going to flip back to my screen. And what I find interesting is that pretty much that exact area. And actually to showcase this, I'm going to go over here to my normal charting software here. Not my normal charting software, but my regular screen. We'll go here and we'll look at Ethereum. And of course, as you guys know, I am an 8-hour and a 3-hour trader. So let's go look at that exact period in time. So March 11th to March 14th. If we go back, actually, you know what? This is going to be a better example with BitMEX because we charted all this out at that point in time and we talked at length why we were long. So here's let's go to the 8-hour chart here for Bitcoin. It was pretty much back. This was actually the last time that I talked about this was February 10th to 12th. And I'd be interested to see what the confluence was between the technical setup that I saw at that point in time. Oh, you know what? I clicked on the wrong thing because now people can't see it, man. Here we go. So there we go. Now people can see it. Sorry about that, guys. He is back. So at this point in time, and again, you guys know pretty strongly if you guys are follow the show, you guys know how I feel about most traditional indicators. You guys also know how I feel about most things such as lines or chart patterns or anything like that. Anything that works, 60% of the time it works every time. I'm very hesitant about, which is why I've been so supportive of the stuff that Bennett talks about, because I don't think that he's one of the few people out there that's talking about actual data-driven metrics that you can view in the market. Things like order depth ratio, things like the bid-ask sum, things like what is the number of limit buys and limit sells on the order book, for example. Stuff that you're not going to hear on your typical YouTube channel. And looking at the bid-ask sum has become a part of our daily schedule here, actually, as well as the market depth ratio. That's a good one. The only issue broadly that I can, and I think you pointed out a fantastic example of points in time where there is just wonderful confluence between both what the market depth ratio was doing on March 11th through March 14th, for example, and what the bid-ask sum was doing at that same period in time. I mean, that's screaming at you to go long when you have those levels of confluence. And I agree with you as well. When the bid-ask sum, especially when you look at, because I always like to look at Coinbase, Bitfinex, and BitMEX when I'm looking at the bid-ask sum. And the reason why I like to do that is because I like to see that there's actual spot buying and not just futures speculation. Because sometimes you can see bearish limit selling on the on the spot platforms, but bullish sentiment on the BitMEX platform. What that often will lead to is just general sideways or stop loss hunts and wicks in areas of the market where, in general, as a longer term trader, I'm not really interested in having a position because I don't like getting thrown around by the market. So I think the last time that we talked about the last two big trades that we plotted out were, again, we had drawn a pitchfork structure at this area of consolidation. This would have been back toward the middle of February, the last time when we actually started breaking up and going back up to test 4150. We had talked extensively about the actual shift in market structure, and just when you see strong closing out of consolidation on strong volume and convincing candle body closes, that is indicative that an uptrend will generally continue, as opposed to when you see levels of consolidation and strong closes with large wicks. That's often indications of reversals, as I think you've talked about extensively in your videos as well. How can we, and that's a question we get a lot because, that's part of my time transformation indicator is unnatural volume detection. And so a common question that we'll get is, well, how can you determine what is breakout volume or what is breakdown volume and what's oversold and overbought volume? Well, and sometimes I don't want to say they're tricky to identify, but a good rule of thumb is, are you having unnatural volume with long wicks after an established trend, generally an indication that the market is likely to reverse? Or are you in a period of consolidation and then you break above or below that level of consolidation on a strong closing basis with high volume? That's generally a strong indication that the price will continue on in that direction. And thank you so much for the sub on YouTube. I don't speak kanji or Japanese. I'm not sure what those characters are, but thank you so much for your support. Anyways, so we saw the exact same thing back here in this consolidation of February. Now, my personal take on the market is this. I had been charting this area out for several times. And again, the Ethereum chart is a little bit cleaner than this, but we'll go to the BitMEX chart. And there's going to be one big data metric that actually I'm really interested to hear what your opinion is on this. And this is what we've been talking about kind of for the last 4 or 5 days, is the Ethereum longs to shorts ratio on Bitfinex, which I don't know if you're a fan of Spaceballs, but it's gone to plaid. It's gone to plaid. But anyways, what we had here was we had talked about this level. And again, this is not traditionally a breaker, but we had this level of equilibrium between our range high and our range low. So price came back up into the equilibrium level, which also represents a zone of aggressive initiation. So if we're looking at the chart here, we can clearly see that right before we had this spike to 4150 and then received violent rejection, that we had a level of consolidation, which again, I've talked about at length. Generally, when you see consolidation making higher lows underneath a level of resistance, that is likely to break to the upside. Now, that's not confirmation to enter into a bullish trade because you're still taking a gamble. But when you see that, when you see price not getting violently rejected from a level of obvious resistance and kind of just hanging out and consolidating on low volume, you're waiting for any opportunity to break to the upside. And if you get that nice convincing candle close above resistance on good volume, which is exactly what we saw, well, you would have been honestly looking at the 8-hour chart. You would have missed that opportunity, but you did have good indications on lower time frames, hourly, 15-minute, 8-hour chart. But anyways, you are looking for any indication to take that position alongside. And then, if you guys will recall, back at that same period, we were short from 41.14. Why? Because of and actually, I want to thank. I want to thank a member of Bennett's community for this, which was Big Herb, which is the total Bitfinex longs to shorts. They were just ridiculous. They were just jacked out. Everybody was as long as you could possibly be on every asset across Bitfinex. That, in conjunction with the critical weekly level of resistance, led me, along with other technical indicators, to take the trade to the downside. So price has returned, as I talked about here. Price returned to test the area of trapped buyers because we had aggressive initiation, individuals having stop buy orders here, buying into the breakout, a lot of shorts getting liquidated on this candle right here. Not all that all added fuel for that candle to be the size that it was. Price fell back down through that area, and generally, again, when you have a level of demand that should be supply, or excuse me, when you have a level of support that should act as demand and that it is completely disrespected, generally on a very violent basis, which is what we saw here, you expect for that level to become strong resistance or strong supply. Why? Because you have a lot of trapped buyers. Either they aggressively bought into the breakout with their stop buy orders coming out of this consolidation period, or when price was up here, they're thinking to themselves, well, look, this was the last place the price broke out. I'm going to buy a retest of support. I'm going to set some limit orders down there. And if they had done that and not managed their stop losses very well, well, they're going to be trapped buyers. They're going to be trapped buyers at this level of 39.30 to 39.70, as we talked about. Price came up to that level and rejected, and then ended up breaking through after this nice Darth Maul candle that we got pretty excited about the other day. Now, what we see on its face is price break above that level on convincing volume, come back and hold that level as support, which would on its face lead to establish this level as new support, and we would expect for price to push higher. Having said that, we go over to the Ethereum chart is what I want. Oh shoot, that's my pine code. Don't mind that. All right, let's go look at the Ethereum chart now. The same level that we saw over here. See, Bitcoin tested that level of trapped buyers much earlier than Ethereum did. Ethereum only just recently tested that level and got rejected. So we have that same level here where we have trapped buyers. And as we saw on the Bitcoin chart, Bitcoin came up and tested that area quite a while ago. Came back up and tested that area on the 9th of March and got rejected from it. It had consolidation at a higher level. Ethereum just recently touched this level. So when I'm looking at metrics like this, here's what I have to say from a purely support and resistance standpoint. Bitcoin actually does look bullish in the short term based on this support and resistance flip. All right. The problem that I have with taking a long position on it, and also, by the way, there's kind of a key thing, which is the Asian session hasn't opened yet. We're about to see the close of the weekly candle here in about 40 minutes, and I'm very interested to see in which direction the market movers leading into the week is going to take this direction. I don't want to buy into high volatility, and I also don't want to enter into a position at the wrong time. So the Asian session is going to start up about 9 or 10 p.m. tonight, followed by the London Open around 2 to 3 o'clock in the morning, my time, and I'm interested to see in which direction the market is going to take this position. Either way, if I had to gamble on it, I would assume that we get a stop loss hunt to clear out liquidity, which I think you're quite right about. But moving down to the Ethereum chart, which is mainly what I'm keeping my eye on, is the fact that we've already cleared these highs that we hadn't been able to clear before. We had equidistant highs here, and here, and we were finally able to push up into that area of 142 to 143 and grab all that liquidity for Ethereum that we hadn't been able to grab before. And then when we go and look at this, which I think is the most important thing that I'm keeping my Ethereum longs divided by Ethereum shorts. 4.9 longs to every one Ethereum short. And as I talked about, this is the highest level that the Ethereum longs have ever been. And it's also the longest time period that the Ethereum longs have been above 3 to 1. The last time that Ethereum longs were above 3 to 1 lasted about 6 days. And that was back in November 2018. And I think we all remember what happened after November 11th, 2018. Price dropped 60% in the course of several weeks. So I'm not saying that that's going to happen this time because, again, that's only happened once. So it's just kind of a statistical abnormality. But the fact that we see Ethereum longs maxed out as high as they could be, and the fact that we see price in general very close to levels of resistance on weekly timeframes leads me to think that unless we see a massive influx of buyers, violent movements to the upside are generally at this point in time going to be for the purposes of selling. So that's my take. Bennett, what do you got, man?
Yeah. You mentioned about 5 minutes ago, sometimes we get a price move down or sometimes we get a price move up and we don't know whether it's a genuine trend breakout or if it's a stop loss hunt. And determining between those can be pretty tough. And that's where I want to introduce the topic of open interest. And this is a video I had just done about, I did it last Friday. And what open interest can tell us is how many traders are closing positions relative to how many are opening, which gives us the likelihood that that price move is going to reverse or to continue. So I'm going to share my screen. I'm going to show you guys open interest with price overlaid. And you can get this as well at you go to 10threecharts.com/u/bitmexstats, and you guys can look along with me. Can you see it?
Yep, looking good, awesome. Man.
All right, so let's just focus on two things right here. Let's just focus on price, which is here. We're on the 1 hour time frame and we're looking at Bitcoin. Let's also take a look at open interest. Now, typically when we see a massive drop in open interest, like I had said before, that tells us that a lot of traders have gotten screwed, have gotten stopped out or been liquidated. You can even see the liquidations down there. If you take a look at this candle here, price first moved up to liquidate the shorts, And then price moved a lot more down. So you can see below this low here to stop out a lot of traders who had put their stop losses just below the 3,800. And we had a massive drop in open interest. Something really interesting that actually ended up happening is, look, the uptrend began, and typically, and you can look this up as well, when price increases and you see open interest increase, typically that leads to a continuation. The trend typically ends when open interest falls off, but the trend continues. Divergence. Where do we see that? We see that here. Notice at the very end of this downtrend on the 1 hour that price was moving up here, but open interest was declining. What that means is that at this point in time, the uptrend isn't attracting new longs and new shorts on BitMEX. Instead, it's stopping out the shorts, it's liquidating the shorts, and late stage closing of long positions or of unprofitable short positions may be happening. Now, take a look what happened right after. After this massive drop in open interest, price fell. And that's how I typically like to look at these kinds of moves. Let's take a look at another. So you can see here, price was dropping, and a lot of people might have been bearish, right? But look at open interest. People were closing positions and not opening, and then open interest just increased after price increased. And it's this kind of formation where you see a move lower or move higher, a drop in open interest with that move, and then price moves in the other direction with an increase in open interest, with positions opening in the direction of that emerging trend that typically leads to an uptrend. And final example before I turn it back to you. Now, this move was something a bit different. This right here was not a stop loss on, right? Price continued to go down, and then we had consolidation. Well, why did this occur? And why didn't price just jerk back up immediately? Why did it take this time? Two things here. One, notice how price was dropping on increasing open interest. This is typically a bearish sign, because what does this tell us? This tells us A, that longs and shorts are opening in the direction of the trend, making it more likely that the trend continues. But B, more importantly, and more sinister from BitMEX, when open interest is not decreasing, when open interest is increasing with the price falling, that's telling me that traders have not gotten stopped out yet. Traders have not gotten, screwed over, liquidated yet. So price should continue in that direction until it kills the longs and liquidates them, and then price, is going to reverse. And you can notice here, the final example, price increased on a massive drop in open interest. So price wasn't really able to go any higher because it couldn't attract enough buying or longs and shorts for it to continue. So when this massive drop in OI happened, you can bet that price is probably not going to go any higher. So really what we're looking at for this is these massive drops in open interest with a price move in that direction, like there. These are price moves that are probably going to be fake outs, and price is more likely than not to move in the opposite direction. Another beautiful example is here. Notice how price moved up, but open interest fell, so price moved back down. But then notice here, this was a genuine breakdown, and open interest increased. So really what we can take from this is when you see a price move, and I would recommend the 1 hour over the 5 minute or the 1 minute, because the 1 hour is going to give you a much better collection of data. You want to look out to see, are traders opening positions in the direction of the trend? Now, that doesn't mean longs opening in the direction of the uptrend. It means both longs and shorts opening more positions than they're closing in the direction of the trend. And if you also have more of a sinister look at the market and say that price should be continuing to move in its direction until it screws over the traders who were wrong on that direction. Because once those traders have been stopped out and liquidated, then the trend gets reversed. So if you have that kind of mindset, you can adapt that to open interest and find some great points of reversal to buy and sell.
Yep. Again, one of the common refrains around here is without a significant change in volume or sentiment, the trend is unlikely to reverse. So we're looking for those critical moments of the markets, either when lots of traders are getting stopped out or lots of traders are getting liquidated. We're not really going to see the market turn around until those things happen. And I think that's a pretty suffice way to use open interest as well.
Yeah. You want to look to see, are traders getting stopped out and liquidated yet? And if not, the trend's probably going to continue unless we see a major volume spike or sentiment shenanigans.
All right, so let's see here. So going if I just applying my thoughts to these, if we go to Ethereum on the daily, If we go to Ethereum on the daily, here's the thing. Indecisive moment in time right now. The reason why is because, again, grabbing liquidity here to the upside and then having this nice candle right here. I'm going to be overall still bearish until we're able to get back above this order block. Again, I have a position based upon the same metrics that I've been talking about for a while. Looking over at Bitcoin right now, I also have a position. I still it's very difficult for me to look at this any other way than bearish for me. The reason why, again, I think the most important thing to me is going to be those longs to shorts ratios. I pointed out the Ethereum longs to shorts ratios. What's interesting is if we look at the Bitcoin longs to shorts ratios, they're flat. There's nothing going on over there. I mean, it's about as flat as you can get. So 1.1014, meaning that as far as Bitcoin is concerned, in my point of view, all the traders on Bitfinex are basically like, could go up, could go down. We don't know. We don't want to have a position. So overall hedge, especially if you go to look at data mesh, there's a large percentage of those short positions that are hedged longs. So anyways, the idea here, the key concept here is, guys, is just there's lots of interesting positions to be put on. We're at a very exciting time. I would just caution you that when you're going to open up a position, and LTC USD shorts on all-time high. Yeah, I kind of feel very similar about LTC as I've talked about, especially in the members lounge. Again, one of the things that we focus on in this show is making sure that you guys are prepared with proper risk management and proper money management for whichever direction a move happens. Again, tonight, and again, I'm interested to see how the weekly candle closes. And let's go over and look at the weekly candle on XBT USD. All right. So 1, 2, 3, 4, 5 weeks of ascending uptrend, bringing us very close to the level of resistance. Again, we charted out this level of resistance a very long time ago. Now, one thing that I'm common of saying is that when you do approach, and it took me a long time actually, because you're going to hear different things about this, but my personal take is that when you approach resistance or support on low momentum, that's actually indicative of strength of the underlying trend. It's only when you approach support or resistance on high volume or high volatility that you can get a reversal, and I think that's congruent with some of what some of what we've talked about previously in the show. So as we can see on the weekly time frame, we do have Bitcoin approaching that level of resistance around 4161 on low momentum, on low volatility. When we look at the wider time frame, when we look at the wider resistance, So we'll wait and see, guys. Again, we're going to see which way the market takes a pick tonight, guys. When the Asian session opens, it's going to be interesting. So be prepared, man. Be prepared. I don't have a... Sorry, I think I cut out there for a second. I don't, another aspect of being a good trader, I think, in my opinion, is... knowing when to be patient and knowing when to let the trades come to you. Because there's a very good trade, as I talked about previously, there's a very good trade to be taken above 4,000, and there's a very good trade to be taken below 4,000. Just don't get kicked out of your position, man, by entering too soon without any kind of confirmation. Got a lot of questions on LTC USD. LTC USD longs and shorts at all-time highs. And actually, I do have a pretty strong opinion if we go look at the LTC H19 chart. I'm going to have to look at it over here. Otherwise, and go ahead and throw on, this is my test screen where I'm testing out some new indicators. Let me say what's going on to the chat here real quick, guys. Sorry, I've been ignoring you guys. Mustafa Frywan, what's going on, man? Ron Legato, Jamie, Dan, Chocolate Randy, Matt Dan Durand, Emmy Mason, Jurgen Ernst, Casey Taylor says, dude, Justin, I need this, bro. Just stream already. Well, we're here, man. We're here. All right. Jonathan Krause says, I feel like I'm part of the Milgram experiment. Miss, what's up, man?
That's a good comment.
Yeah. Mr. Ether, yes, of course, man. Don't trash Tyler and we're cool. I don't know who that is. A lot of people asking about XRP. Anybody else notice that Bcash broke out? Yes, absolutely, we did. Peter says, two of America's most wanted traders in the same place and at the same time ain't nothing but a TA party. Peter says, I think we make a move up to 4K and then a serious after Thanksgiving dump. Please, no more XRP. Anyways, if you got any comments about Litecoin or XRP, Bennett, I guess the chat would probably like to hear them.
Sure. Let me pull up the XRP. Let's do XRP H19. Let's do a BitMEX chart, and I'm going to share my screen with you. All right. So you can see XRP H19, right?
Mm-hmm.
All right. So the first move that I noticed was this run down to here. And we can actually see that this probably did stop out a lot of traders. It went below this low. And it also went below the 8,000 level right down to here. So anyone who put their stop loss here, below here, or below 8,000 had gotten stopped out. That's going to clear the market of a lot of liquidity. That's quite important to look at. The second thing that I like to look at a lot is the specific order depth that we find. So if you want to get this, guys, you guys can go to https vcdep.io, then /coin/Ripple. And what I like to look at is the short-term order depth, and that's where I like to click on the 5%. And what this is going to give me is the likelihood that price goes higher or price goes lower, because we want to see how aggressive the bidding and the offering is on XRP on all these exchanges that you see here. BitMEX is not included. Now, what we see here, this does look like it's quite bullish order depth. If we look at the 1 day to see the actual reading, it looks like it has been quite bullish throughout. The last time where we had MDR at about these levels was March 11th and on March 13th. So if we go take a look at what happened on March 11th, and the reason I like to look back at previous MDR values that we're currently at is if we had a reaction at this level, and now we're currently at that level again, we can make a prediction that a similar reaction may occur because this much buying pressure could materialize into a similar move. So if we look at what happened on March 11th at 1 a.m., that may clue us in on something. So March 11th at 1 a.m. was here, right where my cursor is. That's right before price shot up in a pump about 4.3%. Now, the reason behind that pump is because of all of this buying pressure. And that buying pressure was able to materialize. And after that buying pressure did materialize, take a look at what happened to the MDR. Notice how it reached down to negative 10%. It reached down to that at about 4 or 5 in the morning, March 12th. So 4 or 5 in the morning, March 12th was here. So actually, that probably would have been a not so great place to sell. I mean, if you had just followed the MDR, you probably would have gotten that. But price did go further. But what I'm thinking here is maybe we get another stop loss hunt, but I am more bullish than bearish on this coin because of the MDR that I'm looking at. And because of all of this MDR here, I don't really see much reason to be uber bearish on this. I think that if anything, maybe we get a final stop hunt and then price goes higher. The only reason why I would turn bearish on this is if Bitcoin turned bearish. Because if Bitcoin started to dump, then Ripple's probably going to follow as well. So I think that the likelihood of a bull run here is a little bit more likely than the likelihood of a bear run because I'm looking at the stop loss hunt and the MDR. And if Bitcoin stays flat or goes up, Ripple will probably go up. So that is my analysis on XRP. And what do you think about XRP? Are you looking at the MDR? Are you looking at traditional indicators? Are you looking at the price action? Or
sure. What? I actually had a comment about. So you just kind of you were just commenting on when you saw that the MDR, the moment in time when the MDR actually did flip bearish, you noticed quite succinctly that probably would not have been a good place to sell.
No, it wouldn't have.
one thing that I do like to keep in mind when I'm looking at the MDR is that even when we're looking at within 5% of price, that's still within 5% of price. So often what I find that we'll see, and it is difficult. This is where interpreting this can be subjective, and again using as I'm sure you would caution people as well. Blindly following any indicator is not the way to success. We definitely want some confluence, because the MDR, what I find is the bid-ask sum in the MDR help me determine a positional bias. Like in general, do I think price is more likely to move up, or do I think price is more likely to move down? If I believe that price is more likely to move up, then I'm looking for opportunities based on generally price action to look for good entries and exits into the market. Then if I get technical indicators that confirm that bullish movement, because often they lag a little bit, but then if they're confirming that as price is evolving to the upside, then I'm pretty confident. I'm moving my stop into profit. I'm potentially scaling into a larger position. So when I look at XRP, here's XRP BTC on the daily chart for Binance. And this is one that I've had my eye on for a while. And looking at the so returning to that earlier comment of within 5% of price, we actually did see the MDR do exactly what it was supposed to do. We saw that at the moment when the MDR did begin to flip very bearish, that's indicative of a lot of limit sells coming into the order books. But that just wasn't aggressive market selling at current price. That was individuals who had bought that lower area, setting their limit sells, I would assume, at around that 4 to 5% area. And then the aggressive market buying pushed up there because, again, the MDR is measuring limit orders, not market buy orders. So the aggressive buyers bought up and filled the limit orders of the sellers that had entered their limit sells at that moment in time. Does that make sense? Is that an accurate representation of how I would interpret that?
And you could actually go one step further as well, and you could use the CBD from Tensor Charts. CBD, which is market buy volume minus market sell volume. If you go to Tensor Charts, and if you have Tensor Charts Pro, you can see how much market buying or market selling there was within consolidation or within the trend, and then you can compare that to order depth.
Interesting.
Yeah, so that's one other thing I like to look at, is to see what are how are the market orders working? Are there more market buys or more market sells within a consolidation phase? And if we have an uptrend, just how much market buying is there?
Yeah, that cumulative volume delta is a powerful tool.
Yeah, it's really nice.
So broadly speaking, when I also look at the technical aspects of XRP BTC here, I can see two things that stand out to me clearly. So if I dismiss the market depth ratio and just look at the technical setup, I see here one thing. I see the price is consolidating near the point of control. Price has been respecting a very powerful, and again, you guys know how I feel about chart patterns and things of that nature. But when opportunities for you to use them in your analysis just jump out at you, when things on the chart are so clear, then it behooves you to not ignore them. However, it does behoove you to realize that if you're looking at a structure that is very visible on the market, that everybody can see that. And so not that you should counter trade every visible chart pattern on the if you see a very visible chart pattern, you could make the argument that, well, since this is so clear, I have to trade in the direction that this chart pattern is telling me. I'm not telling you that you shouldn't, but what I am telling you is that you should have a plan should price go the opposite way, because you have to understand that the 99% of traders who generally lose money are looking at that same dominant structure that you are and probably planning it to trade it the same way that you were initially thinking. So that doesn't mean that you always have to initially counter trade them, but just have a plan in motion for what invalidation level has to occur, what price level. If price, so say you were looking to, let's zoom in here so we can talk about this clearly. So say you have this downtrend right here, right? You have a very clear downtrend. And you could plot a trend line from these highs. You could plot a trend line from the candle body closes right here. And you could say, if price returns to that area, I'm going to short it. Well, that would be 1, 2, 3, 4, 5. This would be a sixth touch of that downtrend line, meaning that the more times that you tap against levels of support or resistance, the weaker they do become. So although the dominant idea here would be to short a return to that trend line, I'm not telling you that that's a bad idea in general. However, a good idea would be to have a fairly tight invalidation level that you would have to see a candle close above that level, in which case you would look to counter trade and go long, because you're expecting that if there's a lot of and this is going to apply over to XRP H19, not necessarily spot price. But in general, if you have a lot of trapped sellers and price starts moving above you, they're going to exit their position, and generally price is able to accelerate to the upside fairly rapidly. However, there is another attractive element of the XRP BTC chart, and this is this large gap in the volume profile directly underneath price. So if you look at the area between 8,000 and roughly 7,000, there's nothing there. Price had no interest in doing any sort of trading in this area. And as we've talked about on the show, the volume profile, large, high volume nodes on the volume profile tend to act as train stations. Price likes to hang out in those areas and consolidate for a long period of time. Low volume nodes act as train tracks. And what do trains do when they get out on the tracks? They go, man. They go. So there's two scenarios here. Either a stop loss hunt if you're taking. So let's just look at the technical setup. XRP BTC. I would, if I were to set a trade for XRP BTC, taking into account the market depth ratio and seeing that overall the number of limit buys and sells are bullish, I would look to target that low volume node area for a grab for liquidity, for a stop loss hunt. And zooming in, what are the likelihoods that we're going to see that? Well, if we look at the daily chart and get rid of the VPVR, and we just look at where has price bottomed previously, we can see that we actually have not had, just for XRP BTC hasn't actually had a very impressive stop loss on. We've got lows here, we've got lows here, we're forming lows here, and none of those lows have been significantly violated, okay? Now, generally when we're looking for liquidity runs, those are gonna be more applicable to XRP H19 or any other futures pair. The reason why is because there's just going to be, there's more liquidity and there's more room for manipulation is not the right word, but the profitability of running stop loss hunts, because you're able to go long and go short. Because on a futures platform, when you hit the stop losses of individuals going long, the market is going to go short. They have to limit buyback into the contract, for example, or excuse me, they have to market sell into their liquidation. So the market is likely to move as we talked about at length on the show, that the market is likely to move in the opposite direction of a large number of liquidations occurring. But when we look at spot price, I can see two things very clearly. One, we haven't had any kind of hunt for liquidation. We haven't had a significant, on the daily time frame, a movement down below for liquidity, which I would expect to see should we get a large movement upwards. And then again, when we go back and look at the volume profile on a higher, not a higher time frame, but just a wider glance, we can just see that beautiful gap. I mean, really and realistically, this is one of those trades when you see these just lovely gaps, the volume profile, and you're setting yourself up to take that trade. Those are trades where if you're only able to take a basket of trades a year, these are the kind of trades you want to take. So what I would be looking for, my goal on this I would be looking for that same return. Let's get rid of VPVR here. I would be looking for that same return to that dominant trend line that has been suppressing price, or this level of previous highs right here. I would be looking for some kind of movement either to that trend line or to this area of liquidity directly above these fairly equal highs, right? Now you can make the argument that they've been hit for liquidity, but you can also make the argument that they haven't, because you haven't seen a very impressive stop loss hunt to the upside for those either. A retest of the trend line that does not go above this level, that does not close above the level of 85.50. And then to enter into a short from that position, targeting 7,000 sats. All right, that would be setup one. Setup two would be, let's say that we don't go back up at all. Let's say that we move down. I'd be watching for one of two things. Does price close on a convincing candle body close on the 8-hour or the 3-hour chart below our current support level? So below, let's say 8,000 sats, 7,900 sats. Do we see that? Do we see a long candle body with good volume and a convincing close? Very strong indication that price is going to continue moving on downward, and we have a fairly steep target down below us of around 7,000 sats, potentially even lower, depending on what price does in that consolidation zone. Does price wick down below that level and immediately begin to reverse? So we get a large wick, something that looks like a dragonfly doji or a hammer candle on high volume. I would immediately look to be going long back to these original targets and potentially higher. So if we extrapolate that, what do you think about that, Bennett?
The last thing that you had said is looked, and the zone that you drew is just above some recent highs. So that could be a stop loss on the shorts on XRP H19. Mm-hmm. It could also entice some late stage longs to buy the top. We get the zone that you're drawn could be a potential high volatility, high volume area, which would likely reverse the price. And what I see on the XRP is mounting selling pressure at the lows. Something that you had mentioned, we had multiple touches on Binance of the lows. And that's telling me that at that point, anyone who had wanted to, and you had mentioned that that's typically bearish, and I agree with that. The reason that it's bearish, when you get multiple lows in rapid succession, is you get to a point in time where anyone who wanted to buy at those levels has probably already done so. So there's not as much demand at those levels as there typically are. And the reason why the buyers have been tapped is when price goes down, it fills the limit buy orders of anyone who put their bids at support. You get to a point in time where just no one's willing to bid at support. Price falls through. Price falls a lot quicker because so many stop losses were placed below the bids, below the recent low, which can fuel a downtrend or a stop loss hunt. So there's a lot to take in because, XRP depth is bullish here. But it does look like there could be a liquidity grab of a stop loss hunt where price shoots down and shoots it back up. If I was to tell you what's more likely to happen, my answer would have to be, it depends on what happens to Bitcoin because of the correlation to Bitcoin and how important that is to look at. If Bitcoin turns very bearish, I think that if we get a stop loss hunt, it would be decently likely that a stop loss hunt or a genuine downtrend could even occur. But if Bitcoin turns bullish, I think that XRP just follows it and just goes higher.
I do want to apologize. Hey, Wally, I did not see your donation, man. Thank you so much for the $9.99, my good friend. He says, hey, just joined, and I see there are two faces on the screen. He says we better up the likes and the subs so we look good. Learn, earn, and don't get burned. Good to see you, my good friend. Thank you so much for your support. Highly appreciate it, guys. All right. Yeah, I agree with you. However, I will make the case that, and I'd be interested to see what Enroid is showing us right now.
With the correlations. Yeah, I love looking at Enroid with the XRP correlations.
Because XRP is one of those few coins that can move inversely to XRP. It's kind of like we saw, if we go back to November when we saw Bitcoin fall off the cliff, go look at what Dogecoin did. All the Bitcoin OGs put their value into Dogecoin, and that thing moved up 80%. Protected a little bit of their USD value.
Did you pull up the Enroid?
Yep, I'm looking at it right now. So I want to see XRP's correlation to Bitcoin. Okay, so right now, XRP and BTC are heavily correlated.
Yeah, positively correlated.
Yeah.
That's what I had noticed before, and that's why I think that in the short term, if whatever Bitcoin volatility comes, I think that XRP follows Bitcoin's volatility.
So broadly speaking, if Bitcoin does see a liquidity grab around that 4,000 region and gets rejected, any movements...
Going to go up.
Yep. Yeah. Then any movements of XRP around that $8,300 to $8,400 level are going to represent opportunities for selling, which is actually the setup that I have here. So this is just the technical setup that I have because I'm assuming that price. But again, I'm prepared because again, looking at XRP H19, look at these lows: 1, 2, 3, 4, 5 lows. There hasn't been a really impressive hunt of any of these lows. Not at least in a way where, you could make the argument that here you had this low, price made this low and then moved higher. But we're looking for like a significant movement that breaks us out because again, here's that same descending trend line right here on XRP. We're looking for something that actually breaks us above that. You know what I mean?
Yeah.
So, any hoosers, yeah. The correct setup for me is to look for that return here and look for that short. Again, I have that initiation level around 85.50. So if price were to close above that, I think that a short would be invalidated and we'd be moving higher, especially if Bitcoin is moving higher. But I don't think that that's likely to occur if Bitcoin doesn't get rejected, or if Bitcoin moves above 4,000 on a convincing basis. Then short setups generally get invalidated, at least in the long term. Because of course, if Bitcoin does go on a tear, then we're going to see mid caps and other large caps take a small hit momentarily as liquidity flows into Bitcoin. But Bitcoin dominance continues to drop, which is another interesting aspect and factor of this as well. Looking at Litecoin as well, Litecoin longs to shorts, extremely extreme. They're in the plaid section as well. So it's kind of how I feel about the entire market. Unless we see a significant influx of new buyers, I don't think that the longs have been punished enough. I do think that we are going to move lower.
And you mentioned that you looked at the total sentiment that Big Herb had made. I love that indicator where it adds together, XRP, LTC,
Yeah.
BTC, Ethereum. And I do think that, what is that, 70 something percent, or is it higher than that?
Let's look at it. Let me pull up my indicators. It's going to be under my favorites, and yep, Bitcoin, Bitfinex total longs, shorts, altcoins aggregate by Big Herb. So shout out to you, Big Herb. You're one of the good ones, man. All right, cool. And I just had the dollar weighted value of the total BFXLS long short coins currently loading. Here, let me scroll up and engage with the chat a little bit, guys. Thank you so much. Ed McCracken says, just took 2 new positions in ONT and Nano. Any thoughts? I've talked about ONT and Nano. They technically look quite good. Nothing's changed. Patterns in crypto probably only work 20% of the time, right? Which is why we do not trade them. We do not trade chart patterns here at Kraken Cryptocurrency. We don't trade RSIs. We don't trade stochastics. We don't trade Bollinger Bands. We don't really trade Fibonacci's. Yeah, so let's look at, all right, so total, I want to make sure that I'm reading this right. Blue. Okay, so blue. We're actually at 67.25. So actually down from the peak.
70.
Yeah, actually down from the peak of when we were at 71.47, which if we go ahead and correlate this with XBT USD, I just want to, hey, Peter, I do want to respond to your comment. Here's the thing, man. Neither myself nor Bennett possess a crystal ball. The purpose of the show and the purpose of what we're trying to do is prepare ourselves for what profitable position we can take in the market. If you think that, Bennett, you got that special secret hidden app on your phone that tells you exactly where price is going to go, right? You got that in the secret Illuminati meeting, right?
Oh yeah, the Bogdanov private link. Oh yeah. He texted me right before the dump.
Yeah. Dump it.
Yeah.
Do what must be done. Market sell.
Fibonacci was not kidding around.
Yeah, for real, man. Hey, man. No, listen. There are times, and again, I've come on here. There are times I've come on here and said very, very confidently, like for example, when I went long on Ethereum from 122.50, when I went short from Bitcoin at 41.14. There are times I come in and I can make a very compelling and convincing case for, hey guys, I've done my. This is where all my indicators. This is where all my research. This is where all my analysis points to. The direction is down. Right now, I am bearish. I think that there are 2 possibilities, and I know that. And here's the thing, man. Sometimes this can be frustrating to hear that, hey man, like you make a living from trading. Don't you know which way the market's going to move? No, the reason that I make a living from trading is that I fully understand that I have no idea which way the market's going to move. My job is to set myself for statistical probabilities and to be prepared for whichever direction the market does decide to do. I have invalidation levels for long position and validation levels for short levels. So right now I'm in short positions on Bitcoin and Ethereum. There are other positions that I've established. I have higher limit sell orders for both those positions and looking to manage them with the rest of my capital, and then I will scale into them as the market evolves. But if I had to enter into a position right now at this moment in time, I would probably wait until later on tonight, man. Again, until we start to see some volatility coming in for either around 11 p.m. Central Standard Time, my time, which is generally when the market picks up. Or around 2 to 3 o'clock 2 to 3 o'clock a.m. Central Standard Time, which is the London Open in my area of the market, or excuse me, in my neck of the woods. Again, do not. This is one thing that I would really pay attention to. Pay attention to the times when the market does tend to make highly volatile moves. You're going to see those movements toward the end of the daily candle close, which we're going to have here in about 3 minutes. You're also going to see those highly volatile moves toward the end of right before midnight, my time, Central Standard Time, and right around 3 o'clock in the morning, which is the London Open. After that, the only other time that the market really moves is the New York Open around 9 in the morning, my time. But other than that, market doesn't do a whole lot. So be positioned to take, be positioned is my recommendation, to have your limit orders set up for which way you think the market is likely to move at those points in time. Doesn't always mean you're not going to sit around doing a whole lot of nothing, but hey, that's why we got the Discord, so we can sit around and voice chat.
When coins are in low volatility, I actually do have another note on predicting volatility. Like a lot of traders say, hey, what times or when should I expect it? I think you made a good point about opening sessions. One that I would like to make again, and I've mentioned this many times in this stream, is open interest again. And there's another way that you can read it in a pretty cool way. And basically what it is, when you see increasing open interest, that means that more positions are being opened than closed. On BitMEX, when you see a lot of traders opening positions, that means more stop losses and more potential liquidation levels. So the more traders that you have crowded in that space, the more volatility that is likely to ensue. So if you were to go look at and I can share my screen to show you exactly what I'm talking about.
Yeah, flip on over there.
So what you can do, a little hack, is you can see this open interest chart. Again, guys, this is price and this is open interest. And you can see that whenever we have a prolonged period of open interest, basically what that means is that more traders are opening positions than than closing their positions. So eventually you get open interest to such a high level. There's so many stop losses set. There are so many liquidation points set that the market's going to be moving on high volatility eventually to stop out those traders and to flush out the weak hands. And you can see we had an increase in OI here until we got this. And now we're rebuilding the open interest right back to here. And when this open interest increases a bit more, I am not going to be shocked by a highly volatile move. Because you can see that if you actually look at the pattern of open interest, you can see it tends to increase slowly as people build positions, and then it decreases all at once. It increases, then it decreases very quickly. And the decreases tend to happen quicker than the increases because people losing money, getting stopped out and liquidated is really what can cause a lot of volatility in crypto, especially on BitMEX. You can see that here as well with increasing positions. And then we just had a massive drop. And it was this point, we had $485 million, 485 million contracts on BitMEX at this point in time. That went down to 378. We had a drop of 100 million contracts closed. And a lot of those guys were probably closing for a loss. Potentially shorts would get stopped out here, and longs got stopped out here. How would we know that there's high volatility? Well, it's whenever you see a prolonged increase in open interest that you can expect that a highly volatile move that's going to severely drop open interest, screw over a lot of traders, is likely to occur. So that is my 2-minute spiel on using open interest to predict volatility.
Awesome, man. Well, hey guys, we're going to take about a 1 to 2 minute break just so Justin here can go grab some coffee. Maybe Bennett can grab some water. We'll be back in just about 2 minutes, and we're going to carry on. When we come back, we're going to talk about a little bit more about supply and demand runs and order depth, which I think we've already kind of touched on quite a bit. We're also going to talk about gravity, which I know you guys are all waiting for. And we're going to take some requests, guys. So if you guys would like us to look at some charts, we'll be happy to do that, man. So go grab some coffee, go grab some water. Don't go away too far, and we'll be back in about 2 minutes. And my microphone was muted. All right, thank you so much for sticking with us, guys. Glad to be back. All right, so we're going to look at some more interesting things. We're going to look at your guys' request, and let's see here. I think I want to start off by flipping this over to Bennett, because Bennett has actually something interesting that he has developed painstakingly. Again, pretty hot topic on the streets right now, in the cryptocurrency streets. So for that, I'm going to flip over to him and let him go in depth on that a little bit more. If you guys would like a deeper insight into how we look at price action analysis, how Bennett looks at price action analysis in general, and how he also looks at sentiment data. So take it away, my good friend.
Thank you, Justin. So I spent about half a year, 7 months, working on a price action volume guide. And I didn't want to just write, the everyday price action volume guide, just rehashed from articles and videos. So I found what tended to happen the most on Bitcoin and on altcoins. What was the most likely patterns that typically led to reversals? And the theme that I had on this price action volume guide was to find, in what way can we exploit other retail traders the most? I know that sounds a bit sinister, but the way that I wrote it was to look for stop loss hunts, how to calculate liquidation points on BitMEX so we can trade, like Justin had said, trade reversals off of other traders getting liquidated. We can also look for, and you had mentioned this as well, underwater, also known as trap longs or shorts. So if we see a large amount of market buying at a current price level above the current market price, we expect that to be the resistance, because those trapped buyers are likely to limit sell. And I can screen share with you just for the last part of this, and I can show you guys the chapter list that I have for my guide. This is what the guide looks like. It is a 278 pager, and it starts with just the basics. It goes into volume. Then we get into the stop loss hunting, market shapes, the notion of gravity, which is that price will tend to gravitate away from retail traders. So if a lot of retail traders are opening along at higher prices, price tends to gravitate away. And then also some other ways to actively trade, such as how to set alerts, how to stop loss placement, and your risk management. So if you're interested in finding out more on the guide, you can go check that out in the links in the description of this video, or you can also watch the video that I had made that goes a little bit deeper into what exactly you get when you get this guide. And this also does come with a community where we trade every day, and we work on practice questions and building your pattern recognition through interactive practice. So Justin, you had sent me.
Oh, I think you responded to it, actually.
Yeah, I think I did. I responded in chat, but anyone who didn't hear this yet, the question is, so open interest, something to think about, is that the longs or the shorts on BitMEX? It's both. So I made a video on this. You can go to my channel, watch my newest video. That's on open interest. That will explain it a lot better than what I'm doing right now. When we see a long and a short are both opening a position at the same price with the same liquidity, that is where you see an increased open interest. But if two traders are leaving a position, so if a long's exiting and a short's exiting at the same price, we see a drop in open interest. Just to boil this down into something a lot simpler than just exiting and entering, it's looking at how money is flowing into Bitcoin. And when money flows into Bitcoin and onto BitMEX as price is trending up, the trend will probably continue until we see a massive stopping out of the shorts and late stage market buying of the longs, and vice versa for price going down. So if you guys have any other questions on open interest or really how to gauge BitMEX sentiment in that way, feel free to ask in chat.
Heck yeah, man. All right, let me go to, let's see here. Oh, I guess, you know what, some other things I'd like to get your opinion on while I got you here, man, is what do you think about the SIBO closing down? Because actually I have kind of an interesting Illuminati conspiracy question that's been kind of kicking around in chat. And I've been sharing this opinion with the members in our members group here for a while now. Talked about it extensively last night, but do you have any thoughts or opinions on that?
I actually haven't researched a lot into why they shut it down. I know the CME still does it, and I still look at the COT reports, commitment of traders reports that are released on the CME futures on Bitcoin. But the SIBO shutting down, was it due to regulation issues, or was it due to a lack of volume being traded at that level? Do you know?
their volume was high, was very, very high. I mean, that thing was generating in trading fees for the platform at least $10 million a year. It doesn't make sense to shut it down. There weren't regulatory issues. So I've had a good couple of conversations with guys in the community, and actually I was having some dinner with a very good friend of mine who trades purely off fundamental analysis, right? And again, you guys know kind of how I feel about fundamental analysis. It's one of those things that, 60% of the time it works every time. So always be aware of strategies like that. But anyways, he kind of pointed me to some interesting concepts, and I took a look at them, and mostly I dismissed the articles and stuff that he sent me. But I listened to him because this is an individual who has led me right along a lot of the times. And it also, just a general life tip: if you guys want to be more successful in your trading, know what your strengths and weaknesses are. And I think that is where the value of a community comes in. Because, for example, there are going to be people who are very, very skilled at trading a particular type of strategy. There are going to be people that are very skilled at doing price action analysis. Most individuals aren't. There are going to be a lot of traders that are very good at interpreting sentiment data or whatever, or doing fundamental research, or looking into the aspects or the technology behind coins, at breaking down blockchain technology, for example, or the way that different coins work. Everybody's going to have their own different speciality. Some people are going to be good at waking up in the morning, and some people aren't. Surround yourself with people that can help offset your shortcomings, and I think that is a path to success. I think that needing to be excellent at everything at all times really will hold you back from, just when we're talking about trading. Like, there is my personal strategy of trading and my way of analyzing the markets took a long time for me to develop the strategy that I'm comfortable with, and the indicators that I use, and the method of price action analysis that I use, as well as other various data sets that I look at. So I feel very comfortable. I feel very in the pocket trading my way. Other traders might not. So it's about knowing what your strengths are and finding what's comfortable for you. And again, I think having that humility to know that you will never know which way the market's going to move. You're never going to know how strong a trend's going to be. You just have to position yourself for statistically likely profitable trades, and with very good money management, make sure that you are doing your best to reduce your losses and maximize your gains, because there's no trading strategy or indicator in the world that will help you have 100% returns all the time. It's just not going to happen. It's not realistic. So with that being said, let me just get your thoughts on this while I got you here. So the CBOE had the highest volume in December. Okay, CBOE and CME futures launched right before Bitcoin reversed at 19,000. All right, we're drifting from technical analysis here and into some fundamental analysis. So the thought would be that the CME and CBOE futures launching helped propel the price of Bitcoin up to beyond ludicrous levels at around 19,000, right? Where the writing was clearly on the walls that we are now in an extremely overbought uptrend, but you could have said that by all rights previously any time in that uptrend. And this is why I say you're never quite certain how far an uptrend will go and how far a downtrend will go, right? You can just look at, you can look at things like you can look at all your fundamental data, or not your fundamental data. You can look at all your technical analysis. You can look at all your price action indicators. But again, you have to wait for confirmation. The strong confirmation came when Bitcoin rejected violently $10,000 in one day, pulled back up and made a higher low. That was my indication to be out of the market. So CME CBOE futures launching at the beginning of Bitcoin's downtrend, right? We have the current bottom of Bitcoin in December at 3,100, correct? So, and CME futures CBOE futures volume spiked a significant amount, 30% above their highest in December as well. So taking those two things into account and looking at the fact that Bakkt is looking to launch and people want an ETF to be approved, we can't approve an ETF if there's only one exchange that is responsible for regulated price data, right? Which at this point in time, if Bakkt were to launch, since they're the only physically delivered Bitcoin futures, that would only be Bakkt. Because CME and CBOE, well, CBOE was and CME is currently cash settled contracts. They're not physically delivered, meaning you don't actually own the Bitcoin that's on there. It's just a contract for paper. So the concept here, I guess, the theory is that my friend, who I think is a valid source, is telling me is that what the market needs is actually 2 physically delivered futures contracts platforms. So that CBOE is going to relaunch, but they're going to move into physically delivered contracts. And that's why they had the massive volume spike that they did back in December when Bitcoin was at its absolute bottom. Because if you were looking to buy an asset on the cheapness, then that's where you would look to buy it. So basically all this leads into is the idea that we're going to see backed launch, we're going to see CBOE launch with physically delivered futures. Now we have 2 methods of price discovery, 2 regulated entities that are going to be responsible for price discovery. And that's the only way that an ETF can be approved, because you can't have a monopoly in the marketplace. And if there's only one regulated exchange for physically delivered contracts, and in this case that would be backed currently, then you're not going to the SEC is not going to allow that kind of monopoly on price discovery, price data. So you need 2, and this would posit that the Bitcoin bottom is in. That 3,100 is the bottom. The other aspect of this too is that if price goes below 3,100 down to that $2,700 level and stays there, miners are going to shut off. And the OTC market, which backed and CME and CBOE rely, or not CME because they're physically or they're cash settled, but any physically delivered Bitcoin futures contract is not going to be buying their coins from Coinbase. They're going to be buying their coins OTC. The exchanges like Bakkt and NASDAQ futures listing, they're going to be buying their coins OTC. So if miners shut off, which most of them will do if price goes below 3,100, then the OTC market's going to dry up, and the network or the security of the Bitcoin blockchain is going to be significantly affected. So anyways, that's a whole lot to say that they're from his perspective, there's a strong case that for this reason that the bottom might be in. Now, again, this is all speculation, but it's interesting things to talk about. And I think that once I started digging a little bit deeper, is about as likely as, the Bogdanov type stuff. So any thoughts, questions, comments, sarcastic remarks?
Yeah, you talked a bit about the bottom of the market and what I believe, and well, not what I believe, but I am going to share what I believe. And you said that miners would probably shut off what they're doing if price goes below 3,100. I think that it really wouldn't be crazy for price on XBT, USD, BitMEX to go in the 2,900s and then jump right back up. That kind of price move, that violent, within, I would say, even under an hour, that would stop out many positions. It would generate a lot of liquidity, and then we could begin to see open interest flowing back into the market into a very strong long-term uptrend. I think that a terminal shakeout is not off the books. Currently we currently from December, we've had a period of prolonged consolidation. If you look at the daily, we've had a few bull runs, a few bear runs, but it's basically just been consolidation. And I think that a massive bear run that stops that many traders, liquidates everyone, could be something that's on the books. And it would happen in such a short period of time that the miners would not have to worry about that. So that's just my, medium-term bearish sentiment on something that could potentially occur. So something you may want to be careful of is that below 3K range.
Yeah, we talked about that. I think we talked about the exact last time that we were on the stream as well. Is price going directly below the recent low of Bitcoin's price action? And again, if we go look at the daily chart, you know what? And I apologize because I did misspeak. So we just recently had daylight savings time, and that's really not been constructive. So now I guess now I do have to wait an extra 41 minutes and 22 seconds for the daily candle to close. I apologize. Yes, the daily candle will be closing at the end of the stream, as will the weekly. Let's go look at my long-term. Let's go look at my long-term chart. So from a technical perspective, so ruling out everything that I just said about, and we'll actually go look at, this is the BitMEX chart. Ruling out everything that I said about kind of fundamental, looking at mining, looking at Bakkt and CBOE, things of that nature, blah, blah, blah. Here's the Tether chart, which shows it clearly, but I think we all want to look at the Bitstamp chart because that has the most historical data and is the cleanest chart that I actually have for looking at these long-term historical data. So we do see that the bottom's in currently. So the lowest weekly candle body close is 31.93. Directly below us, we do have an area for liquidity right here at 29.72. So this zone right here represents an area where if price were to go this low, this zone right here would be where buyers are likely to be. below a previous level of significant horizontal support and resistance. So as we can see on the weekly this was back in May of 2017. Price is running up to this level of around 29.70, pulls back very violently and reverses, comes back up, hits it as resistance, consolidates underneath it for 1 week, and then breaks through. And then back here in August of 2017 again, price wicks down very strongly to that exact same level and finds support. And that was really the last significant pullback that we had, the last scary pullback that we had before price really ran up to 19,000. So I would expect that level. If we do go below 3,100, I would expect there to be a liquidity in that exact same zone that you were talking about, that $2,700 to $2,900 area. But I would be very surprised if price were to close below that. But still, as we approach those levels, still the safest position to be is in a short, because trying to pick the bottom or the absolute top of every market is a fool's game, in my humble opinion. You know, when you're talking about what positions to enter. So would I have blind limit orders at 2,700 or 2,800? No, because you don't know how far the movement's going to go. So I'm not in the habits. I'm not really in the game of knife catching. But that's my personal my take on the market. The reason why is because I look at opportunity cost. And if you're looking at trading the market with a significant amount of capital, there's plenty of anxiety that you can reduce. And I think correct discipline setups that you will allow yourself to take if you are patient and wait for confirmation on a trade. Are you going to lose percentages by not being able to capture the absolute tops and bottoms? This is where me and Bennett differ slightly in our strategy. Yes, but again, when we're looking at big moves like the bottom of the Bitcoin bear market and price going to 10,000, I don't think you're losing a lot of. I don't think you're going to lose a lot of percentages. I don't think you're going to look back and kick yourself and say, "Man, I didn't get in at 2,700. I got in at 3,200 after we bottomed out and it was confirmed. That's good." Be very happy with that average entry. And again, I've been on record saying that I think in general, any entry between, if you're looking, and this is not trading advice, this is not investment advice, but anywhere between 3,000 and 4,000, if you're looking for a good average entry into Bitcoin, I don't think anybody in their right mind would be upset with that.
I think that I agree with the investing mindset that you had mentioned. I think it all depends on you. Before you even get into this business, you have to decide whether you're investing or trading. Because if you try to trade and then you start bag holding and then you're an investor, that's not exactly a great plan. Hodling. I think that if you're a trader, then catching that knife, or not trying to catch the knife, but those short-term trades that can offer beautiful risk-reward trades can be very lucrative. But I think if you're more of a long-term trader or an investor, then I think that it doesn't really matter if you get a 3,200 or a 2,800. But if you're taking a short-term swing, that move could potentially stop you out. So, of course, it's all perspective. And you had mentioned this before, but I think the most important metric for you to look at for whatever trader who's watching this, find where your strength is. Do you like looking at order depth? Do you like sentiment? Do you like price action? Do you like indicators? Do you like trading in a very short-term way, or do you like more of a long-term, slower investing method? And wherever you find the most success or the most comfort, I think, is where you should just continue to put all your resources into just doing that and maximizing your edge in that field.
Yep. Many ways to trade the market. So let's go down to these lower time frames. Hey, by the way, I saw your VWAP video. You wanna elucidate on using VWAP a little bit?
Yeah, sure. So I made a VWAP video about 2 weeks ago. And first of all, before I explain what VWAP is and what it does, you can find VWAP in two places. You can find it on TradingView, where it's calculated on the daily chart, and you can find it on any time frame that the data comes from daily, or you can find it on Tensor Charts, where you get to set what you want the VWAP to be set to. Now, what the VWAP is it's a volume-weighted average price. And it's going to give you an indication of where the majority of the volume was transacted within your time frame. So if you look at, let's say, a daily VWAP, but on the 5-minute time frame, that means that the VWAP was calculated using that day's trading. And you look at the 5-minute time frame of that VWAP, what you can see is where was the majority or the average amount of volume transacted. And the strategy that you can take with this is, if you're more longer term, is you can try to buy below the VWAP. That means you're buying at a better average price than the majority of traders and investors. Or you can try to sell above the VWAP, because that would mean that you are selling at a price above the majority of the market. So we can use VWAP as a benchmark to see how successful our trades are historically and also in the present by looking at what the current VWAP is relative to the price.
Yeah, I can tell you this too. Back from trading E-mini futures, man, the VWAP was one of the most popular technical indicators for day traders using the 5 and the 15-minute chart. Lot of interest in using that. But you know what I found really interesting was your just broadly general use of not using it so much as support and resistance, which I find most individuals will use it for, but just as a better way of referencing, did I get a good price? Did I buy low enough? Did I sell high enough? Which I think is a much more practical use of it if you're trading on an intraday time frame.
Yeah, I'm not the biggest fan of indicators as execution, meaning I buy or sell because this indicator, that's the only benchmark indicator that I really know, a technical indicator that's a benchmark. So I think that's pretty cool.
Well, and one of the things that I like to do is again, viewers of the show will know how I feel about traditional strategies and traditional indicators. So, but what you will be taught, if you guys head on over to Baby Pips or Investopedia.com, and what they're going to tell you is if price goes below the VWAP, you sell. If price goes above, you buy. Let's we don't cherry pick here. We use the XBTUSD chart here at Kraken Crypto. Let's see how well that strategy would have done for you. Okay, it would have done well for you here. All right, you would have gotten a good trade. All right, let's give it credit it's due. You would have got a nice, what is that? Nice 3% trade maybe. Depends on where you took profit, Time transformation would have probably had you out 50% here. Maybe you're scaling out here. But if you're just, okay, so let's just take TT off, right? And let's just say that you're trading, which again, this is dumb, right? You can use VWAP potentially as an entry signal, but I think I'm about to tear it apart here. But you definitely want a different exit signal than your primary indication. Let me guys give you an example. Moving average crossovers. Now, moving average crossovers can be good entry signals, right? If you want to be a purely technical trader and not look at other things. I think there are other things you can look at to enhance your game. But one of the things that I do like to promote here is that you should be developing as your core, right? As your go-to. If you're looking to trade, I highly believe that you should have a go-to if this then that strategy. And if you're just starting off, finding a good basket of indicators that are going to completely remove your emotion from the marketplace are probably going to be your best bet. Over time, once you have a reliable and profitable strategy, and keep in mind, I know this is crypto, I've traded Forex, I've traded equity, everybody is really would be upset if I'm like, hey man, I'm going to show you a strategy that's going to give you 20% returns in a year. And in this space in crypto, most people would laugh at me. But let me tell you something. You can take those skills. Let's say you don't have a lot of money. You can take those skills of showing on paper that you can return 15 to 20% a year with a technical strategy, and you can go shop those skills around to prop firms, to banks, and degree or no degree, you have an opportunity to get a job as a trader. If you can show legitimately, and I have, again, this is the path my little brother took. This is the path that friends of mine have taken. Had they've shopped their skills out to things like prop firms, to things like funds. So there are many avenues out there to be able to make a living off of trading rather than mortgaging your home and just purely trading for profit. But I digress. So something like a moving average crossover can be a good entry signal, right? But if you're waiting for price to move back underneath the moving average, that's a terrible trade every time. It's always going to be a terrible trade. You do want a different exit indicator, for example. But anyways, let's just tear apart the VWAP here. So, you would have sold here. That's probably definitely a loser. You would have sold here. I mean, just look at this. The problem is, when the VWAP or when any indicator that you're just going to trade blindly, when it does capture a good move, let's say that you're trading correctly and position sizing correctly. So let's say you have a $5,000 account, and so you're willing to risk 3% of your account per trade, meaning that you're willing to lose $150 per trade if the trade goes against you, right? Because that's, again, that you're doing this stuff correctly, right? So you would have gotten a good return on this trade. Let's see what the distance to your stop would have been. That would have calculated your position size, but whatever. But when you run into this sideways chop right here, there's $150. There's $150. There's $150. There's $150. I mean, it's just there's no argument that you can make that trading this, and I'm not just trying to pick on the VWAP. I'm trying to pick on just about every technical strategy out there for the most part that doesn't take. There's great indicators out there, guys. There are really, really, really good indicators out there. I have 2 of them on my screen right here, which again, if you guys are a member of the members group, you can get access to time transformation. But if you just go get Fisher Transform, it's going to do really well for you as well. Wadatar Explosion is another fantastic indicator as well. There are indicators that were written in this century for the market that we're trading that were not written in the 1960s and the 1920s for stock trading. All right. So if my biggest piece of advice is if you got the RSI on your chart, go ahead and getting that off there. Bollinger Band, take those off. Stochastic, just get those off your chart. They're not helpful. Archaic. But I digress. Anyways, I digress. But yeah, using it as Bennett pointed out, just as a reference tool to say, okay, based on whatever strategy that I was using for buys and sells here, did I sell at a good price? Did I sell above the VWAP? I did good. Did I buy below the VWAP? I did good. I got a question here from Brandon Barkham, and I can only speak for myself. I'll let Bennett answer it. So he asks, you both have degrees in maths / finance / economics? Question mark. Not to pry here, no problem at all, man. But I'm looking for online course credit in a technical analysis course. Any suggestions or chat group? Well, you're gonna get 2 answers here. So first off, no, I have a bachelor's degree, but I studied entrepreneurship and agriculture actually. So my entry into the world of entrepreneurship was I ran my own organic farm for 3 years. I had about 30 employees, ran that for about 3 years before I sold the company off. I did some real estate investment, and then I got into trading, and I've been trading for ever since. I used the capital that I got from my business. I used the capital that I gained from real estate investment to begin trading the markets. And I started off with traditional equity. Then I moved into Forex, and I've been trading cryptocurrency full time since 2016. So no, I don't have a degree in finance. I've taken a lot of economics courses in college, but my degree is in entrepreneurial and diversified agriculture. That's my college degree. Don't have a master's degree. And you know what? And again, you can look at that however you want. But listen, the best traders that I know, some of them don't have a college degree. Trading is one of those rare few things where it's kind of like martial arts. You show up with a black belt, Cobra Kai, school of Cobra Kai, degree, and you're gonna get your butt kicked by, the dude who mops, laundry floors for a living. It's about skill and ability and passion, man. So I can only speak for myself, but no, I taught myself to trade painstakingly and over time. To Bennett, I'm sure who is like, no, man, I've got a PhD in philosophy and.
Well, as you might be able to tell, I actually am a junior at the University of Michigan, and as you guys, some of you might know, we just lost the Big Ten championship to MSU. And that was pretty painful. But beyond that, no, I don't have a degree yet. I'm still in university. But I agree with what Justin said. I think that some of the best traders that I've talked to online and in person, some of them, went and got their MBA. Some of them did get a degree in economics, but a lot of them just found their own way. And their grit was able to eventually turn into a profit. Now, just a quick story on how I came into this. Is I started with equities trading or equities investing. And I got lucky and I invested in Amazon, Best Buy, and Apple about 6 years ago. And I held those stocks for about 3 years. I know I should have continued to hold, but whatever. And then I used that capital that I had made after I invested a lot into those companies and got very lucky. I went into Forex trading. I got destroyed in Forex trading because I found that just banks dominated it. So then I heard about crypto about 2.5 years ago. And after I heard about crypto, I just found that there's so much data, there's so much information, there's so much possibility for this info that we could harness and use to our advantage. And that's why I use sentiment. That's why I use order depth. That's why I look for alternative data because I love looking at it. And I think that if you have a very strong sense of pattern recognition, if you're very gritty, meaning you like to stick with something, and you're willing to take pain, I think that there's no better 3-tiered personality test of a phenomenal trader than those 3. So no, I don't have a degree yet. But I've done well in crypto from just finding my own way, finding my own indicators, and then just looking at pattern recognition and just reasoning why an indicator would work. And if I can't reason the actual psychological reasons why an indicator would work, I just don't use it. It's like RSI and MACD. I don't really have a reason exactly why that would be profitable, but I can give you plenty of reasons why order depth might be profitable, and that's why I use order depth.
Darn right, man. You got passion, you got drive. I think there's three things, man. You need initiative, you need discipline, and you need humility to be a good trader. If I were to classify a basket, again, I spent a lot of time, and I think when I started trading, man, I blew out 2 equities trading accounts. So I started, so Bennett, you took a very different approach to me. I started trading in 2008, the end of 2008, the beginning of 2009 is when I started trading equity. So just a wonderful time to enter. It'd be like if you started trading cryptocurrency in March of 2018, you know? And you could only go long, for example, but anyways, blew out 2 accounts, learned the hard way. And then when I went to start my 3rd account, I just took a step back because listen, I was using all the tools that Investopedia and all that stuff, taught me. I was using trend lines. I was using Fibonacci. I was using RSI. I was using Bollinger Bands. I was using MACD. I was using Stochastic, just all these things, right? I was using chart patterns, head and shoulders and all this stuff. And I wasn't getting the results that I wanted. And so I had to take a step back and really start a very, very, very long journey into learning how to trade my own way and not trading the other way of the 99%, right? So that's the goal, is to be out of the 99% and be in the 1% of traders who actually get the results that they want. And so that's why we do the show, man. We try to just encourage people that it is possible, but you just need to look at yourself. You need to be disciplined. You have to have initiative, and you need to be humble because wake up every day and realize that, hey, man, I don't run the markets. The market's going to do what they want. All I'm trying to do is be in the right direction.
And I really like your point that you made that the 99% of retail versus the 1% of retail, and the reason why, guys, and the traders listening here, that you need to be very careful when you find yourself doing what the majority do is there's just a simple fact. The majority of the market and the majority of people who trade on an exchange or through a broker will lose money. So if you do what the majority of what people do, using the same indicators, using the same risk management, using the same thought process, you're very likely to have the same exact results as what everyone else has had, which is losses. So that's why I blew up half my Forex account, just making the same mistake over and over again with over leveraging in Forex. And I eventually found that the indicators I was looking at, just what everyone else was doing. So for you guys, try to find that alternative method. I know it's not always fun, but look for something, an edge in the market that gives you something that other people don't have. Because if you can do what others don't do, then you can get the results that others don't typically have.
Well said, man. Well said. Let's see here. Somebody said, Goppy says, no degree needed. Just show up with your plan on a napkin. You're hired. Well, here's the thing, man. I've met and talked with lots of people. Like, I've been to trading conventions, and I don't really like them, but you meet all these kind of guys with masters in finance and MBAs, for example. They go to work as traders, and then and they don't cut it, man. They don't cut it because they're not cut out for this. Trading is a very different type of thing. And so they end up going to work at a bank, and they end up going to work for, brokerage firms or, all these things. But as far as traders, a lot of them don't make it because, again, if we take that example that Bennett just talked about, that 99% of traders are going to learn, the way that the other 99% learn. It's not any different from what you're going to learn going to finance school. They're not taking the 1% Illuminati Bogdanov, masterclass in college. They're learning the same stuff. They're learning mostly Keynesian economics, et cetera, et cetera, et cetera. All right, so let's get back into some interesting stuff. So Mutsmut705, can you please explain liquidity zone, liquidity grab, please? Sure. Yeah, go ahead, Bennett.
Yeah, sure. So that's also commonly known as a stop loss hunt. And I talk a lot about the stop loss hunts and liquidity pools in my guide and also my channel. So liquidity pool is a big pool of stop losses and stop orders that are set. We typically look at these stop loss areas for reversal areas. Now you may wonder, well, why is it that price tends to reverse when it enters into a pool of stops? Like, you have your stop loss triggered and then price goes the other way. If you ever have that happen, I certainly have. The reason is because you have to think about the final buyers in an uptrend and the final sellers in a downtrend. Price is going to continue to go down. And when it's continuing to go down, it will stop when the final sellers of the downtrend sell. And when those final sellers sell, then there's no more selling interest and price goes back up. But if you short, and price is going up, price will continue to go up until it hits enough stop losses that the final buyers, the shorts who are covering at a loss, buy. And that's why stop loss funds can be beautiful for us to trade, because you're actually able to position yourself with the final sellers selling to your limit buy order, or the final buyers market buying at your limit sell order, above price. So one strategy that you can do, and that I cover in my book, is look for price lows and price highs, and then also look for psychological price levels. Try to imagine where you would normally want to place your stop. And then if your analysis supports it, place a limit order there, because that's actually probably not a terrible spot for us to pick up the final liquidity of the buyers in an uptrend or sellers in a downtrend.
Darn right. So I'll give my 2.5 cents on that. So let's go to the XBT chart right here. So the area that I've been talking about for a while. Let's go back here. Actually, no. Let's go look at the Ethereum chart, because again, that's a lot cleaner, and that's the one that I've been focusing on. So let's go to the 3-hour chart, and we talked about this yesterday. And you can see it more broadly here. So let's just go look at that Darth Maul candle. And again, if you guys watch the show, we have an area of the market here where we have a period of consolidation, and we've formed quite a few levels of equal highs. This isn't the cleanest example, but again, we have a level of consolidation with clear resistance right here. I've denoted the clear resistance with this box right here. So we have 1, 2, 3, 4, 5, 6, 7 touches of that resistance level right there, right? And price is consolidating. It makes a lower low, it makes a higher low, but overall, it's not really doing a whole lot. There was a profitable trade on the table here. There was a profitable trade on the table here, but overall, the market is not trending strongly in a direction. Well, when you see that you have a fairly equidistant resistance level, as opposed, so you could look at this as an ascending triangle potentially. Again, you guys know how we feel about chart patterns. But the point I want to make out here is that, let me get my drawing tool out, is that we have an area of equal highs, right? We have an area of equal highs. And what we would expect is that if price is going to move lower, that it's going to grab those equal highs. Why? Because anybody going short in this marketplace is going to be setting their stop losses above this area. It's just a logical retail placement for shorts to enter stop losses. Because what do most retail traders do? They don't wait for confirmation of breakouts or breakdowns, and they don't wait for critical levels, which is, again, so if we just kind of flip this, and you can understand the different ways that me and Bennett potentially look in the market, and maybe not different, but just one way that I dominantly trade, and potentially one way he dominantly trades. So and again, correct me where I go astray, Bennett, but this is an area of the market potentially where you're looking at these equal highs, and you're expecting liquidity grab to the upside. Why? Because we have a fairly equidistant level of resistance. We don't really see that same clear low structure right here, where we have clear, equal lows spaced out over time that we would expect to get ran. So just as he talked about, setting a limit order perhaps at the top of this candle or in this zone right here might not be a bad idea for a short entry, right?
That is one strategy that you can do, or you can be more reactive, meaning you wait for price to actually clear that area and then you make your decision.
Right.
Or be proactive and actually place a limit order within the liquidity pool. It just depends on your analysis before any move actually happens.
And then an alternative way, well, not an alternative way, but just a different thing is, and this is what most retail traders are not going to do. They're not going to wait for this candle right here. They're not going to wait for confirmation of a breakout, right? They're not going to wait for that range to be closed on a convincing candle body close, like we see right here on the 3-hour chart. And again, I prefer to trade the 3 and the 8-hour chart. So here we have a level of consolidation. And I talked about this on the stream, how for me anyways, this spike to the upside was to be expected. Why? Because we have a level of equal highs. And I would expect for those levels to get ran for liquidity before price could continue moving in one dominant direction or the other. However, what we saw, and this was a very interesting candle, is that we saw the exact same thing to the downside. Not really a significant stop loss on, although we do go below this most recent low. But the fact that we have this Darth Maul candle in the middle of a consolidation period is pretty interesting. We hadn't seen one of those for a while. Not one that wicked. Not a helicopter like that. We hadn't seen a helicopter like that for a while. So anyways, price did decide to move to the upside. As we can see, price came back up. Had price began moving down, I would have felt very confident in a short position because we had cleared liquidity to either side. And it's at this point in the market where you should probably not be in a position. Because if you would have been short, you would have been wrong. And if you were long, you wouldn't have had any reason to be long because you would have grabbed liquidity to the upside and to the downside. I don't think there's no method of analysis here that is going to let you know very strongly which way price is going to go. I think you're gambling at this point if you're taking a position after a Darth Maul candle. But you get that confirmation here in just a little bit. Price decides to move to the upside, consolidates underneath resistance, in which case you could aggressively gamble, take a long position. But then you get that nice confirmation on the very next candle where you get that nice clean break above resistance, not a big wick, convincing candle body close, and what happens? Price moves up. Price moves up very convincingly. Into an area, and now if we take that same example on a broader level. Now, I want to point out some things here. How many equal highs do we have in this level between 138 and 140? All right, psychological level of 140 and consolidation level of the upper highs of price. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. We had 10 equal highs spaced out from the 24th of December 2019 to broadly the 9th of March 2019, okay? We had a very thick cluster area of resistance where price came up, rejected, came up, rejected, came up, rejected, and then broadly just consolidated below, right? With a few a few lower low structures and a few higher low structures, but overall just a level of consolidation. Now, a movement like the one that we saw is the one that we'd been looking for a while, that movement between 142 and 143. Grab into liquidity and then reject, which is exactly what we saw. Now, I would expect for price to continue moving lower, and I would like to see price close the daily below 139.15. Again, I'm short, so I'd like to see price close the daily below 139, 140. And honestly, if we do reject from here, I do have it. This is a positional short for me because I do think that this is all counterfeit. I think we've completely cleared out this area, and I don't see liquidity until 118. I don't see liquidity until 118. So if you guys want my strong opinion, Mr. Peter or anybody else, I'm short already. And I'm targeting the area of 118, 115, where I do believe we go. Because I don't think that we're going to see turnarounds anywhere. Could happen. Again, you'll have to be a little bit reactive to the market. But broadly speaking, this movement here was to be expected because we've created an area where anybody looking to go short in this consolidation range is going to logically place their stop losses up here. All right. Now, one other thing, as you can see, I have drawn that cluster area, that liquidity zone from 142 to 144, as you can see. Now, an argument could be made that I have drawn it incorrectly because if we go over here to the BitMEX chart, so hopefully I just want you guys to see that. I want you guys to pay attention to this. So look at this consolidation structure right here, right before we broke to the upside and on Ethereum tested that almost 170 level before rejecting, just like we tested that 4,000 level, that 4,100 level on Bitcoin before rejecting. Look at where I've drawn the liquidity here on the Ethereum chart, and you can see that I've actually drawn it on the lows of that consolidation period. Okay, keep that in mind. Remember that. Let's go over here to the BitMEX chart. Look where I've drawn the resistance cluster over on the BitMEX chart. I've drawn it on the highs. Okay. Now, one could make the argument that this is the proper way to draw the liquidity zone. Why? Because this is the level of resistance that we would want to see overcome for price to push to the upside on a retest. And also, if we look at something like the volume profile, you're going to see that on this candle right here, on the 3-hour this is the 8-hour chart, but on the 23rd of November, when we actually had that violent up thrust to the upside that almost took us to 4,200 on BitMEX, there was going to be a lot of stop buy orders above that resistance zone, so right around 39.70, 39.65, as well as a lot of stop losses for anybody that was looking to go short in this consolidation zone, that thought this is the top, we're consolidating, and then we're moving lower, baby. That didn't happen. We moved much higher, triggered all those stop losses, and I would assume triggered a bunch of stop buy orders trying to buy into the breakout. So one could make the argument that I've drawn the liquidity zone wrong. What that means from a practical trading standpoint is that on Ethereum, we could potentially, and I put this at less than 30% probability, but I'm still prepared for it if it does happen. It would mean that I'm going to take a loss on my current trade and add higher, because I do not add to losing positions. If I lose a trade, I lose a trade, and I look to re-enter later. That's called discipline. But I could potentially see a push up here to the 147, 148 region and see that same grab for liquidity and tap into that liquidity from all the trapped buyers that bought into that aggressive movement to the upside. Anybody that did not already sell, this would be their opportunity to sell at break even or slight profit. So significant resistance. So having said all that, Bennett, any thoughts on that, man?
On what you had said, I would always like to relate it back to my alternative data. And my favorite alternative data, of course, is order depth.
Okay.
And open interest.
I thought you were going to say open interest.
Yeah, when I was saying, order depth and open interest. Yeah, but both indicators give me an indication of how people are positioning and what's likely to happen in the future. Currently, open interest on spot exchanges. Not open interest, order depth on spot exchanges. And I can share this again. I shared this at the beginning of our session together. But let me show you guys again. This is the combined global market depth on the 5%. So it's 5% range of bids and the offers. We can currently see that the bids are dominant with an MDR of 4.15%. So you can think that the bulls are stronger than the bears and are more willing to buy than the bears are willing to sell. And typically that leads to an uptrend. However, that's not the end of the story. Because when we look at the BitMEX order depth, we can currently see that we have a difference of a good amount here. So you may ask, okay, so order depth is telling you two different things. Spot is looking bullish. Futures with BitMEX is looking bearish. I can also go on the more short term with the 1% here. That's looking, decently bearish as well. But I tend to just look at the 5%. When these kinds of situations occur, I tend to just wait for a stop loss on, then react to that stop loss on. So if I see a major stop loss on occur, let's say price goes way down, I see a massive drop in open interest, and that could be an opportunity to get into long. And then vice versa, if price goes above 4,000 again, to trigger some liquidity of those stops right up there. That could be an opportunity for a very good sale. If you guys are, curious more about BAS, the bid-ask sum, you can just see here how well it has worked in the past. Gray is price. Green is, you can think of green as demand. It is limit orders to buy. Red is limit orders to sell, which is supply. And you can see that we had bids were dominant over offers here, and price went up. You can see the gray went up, right? And they continued to go up until the offers overtook the bids, and then price went down beautifully. Then the offers were still higher than the bids. What did price do? It went down until here, until the bids were much, much higher than the offers. Beautiful spot to long. Price continued to go up. Bids stayed just about higher. So price just naturally went higher. Now we actually just saw a flip, and now the offers are higher than the bids. Now, when that occurs, I'm thinking that price could consolidate here, have a stop loss on the shorts, and then we could see some bearishness on the books. Because the longer period of time you have one side dominant over the other, like this, I'd say the more likely it is that that side's going to win. The bids were just consistently higher than the offers. Price jacked up. You can see here, price was flat, but the offers were much higher than the bids, so price just dumped. And if I see price continue to go sideways, to the offer it's still higher than the bids, I'd be pretty confident that price is going to go down, especially so if we see a stop loss hunt of the shorts. So that is my take on order depth and what I'm seeing for the future. I think that consolidation is completely on the books right now, and a stop loss hunt reduce the open interest and screw over some traders on BitMEX, I think would be a pretty likely scenario. And it might be the shorts, it might be the longs, but whatever it happens, we're ready to position ourselves on the other side as long as the order depth looks favorable. That's my take on BTC right now.
There you go, man. I like that analysis quite a bit, man. We're right in the same direction, at least as far as I'm interpreting it. You know, I'm currently already positioned to take these babies to the downside, but I'm prepared to see if we get that nice liquidity grab to the upside, which does mean, again, I've had a really good month, but it means that I'll have a loss on the current trades that I have in. And I'll just have to look to reestablish at a higher position. But again, I think that if we retake that, it's going to be very difficult. Here's what I need to see, man. Something, I mean, I really need to see something. How do you feel about this, man? This is kind of the last thing I want to talk about, and then we kind of got to we got to start getting going. But again, looking at those LTC USD longs to shorts ratios and those ETH USD longs to shorts ratios on Bitfinex, we've never seen the longs to shorts ratios this high. So that leads me to believe that unless we get some massive influx of new capital into the market, it seems like just about everybody that wants to buy is bought.
Yeah, typically when we see a lot of longs late in a trend, that's a really bad sign for the bulls. Because again, that's just higher open interest of the longs, meaning more stop losses, more liquidation points, more people who can actually sell and fuel a downtrend. So I do think that once order depth becomes more confluent, meaning that we see MDR become bearish as well. I mean, I think that the likelihood of a price drop is very high if price consolidates and if MDR turns bearish. Pair that with very bullish sentiment, and yeah, I do think that could happen.
Indeed. Same for LTC USD. Same for the Litecoin longs as well. So this is something I hadn't looked at because I've been focused on Ethereum. But it seems here that this doesn't actually look that crazy. Litecoin longs divided by Litecoin shorts are actually negative. There's more people LTC USD shorts. Let's see, there's 31,400 or 314,473 Litecoin short right now. So 314,000 LTC USD longs. There's only 275,000. Yeah, there's way more shorts than longs on Litecoin.
Litecoin.
Yeah, not even close to the same scenario. So if we look at ETH USD longs divided by ETH USD shorts, that number is positive 4.95. So that means roughly for every one person going short on Ethereum, there are 5 people going long. Again, I don't know if you're a fan of Spaceballs, but they've gone to plaid, sir. So yeah, I don't see. I'm very bearish on this overall structure. Again, I'm not ruling out the idea that we do get a nice liquidity grab to the upside, 147. And from a technical perspective, if 148 is established as support and we start seeing massive flows of capital in, then I have to assume that we're getting fresh buyers. But unless that happens, with the longs to shorts ratios being the way it is, and being the fact that we're consolidating beneath resistance, and the fact that just about every other YouTube channel is saying that we're going to the moon. My moon boots are still up on the wall, guys. I'm sorry. They've been sitting there since February 2018. I polish them every once in a while, and I think we are getting close because I think there's a good argument that the bottom is in, that we will see a nice movement down to recapture liquidity. So let's talk about and then we will get going. We got 3 minutes left. Let's talk about the next area. So assuming that we do head down from here, where's the next area where we could grab liquidity and begin moving to the upside? Well, this area right here, the area of 110 to 115. It's been untapped. It's untested. I would assume that there would be a lot of interested buyers here, because if there's not interested buyers here, then we do have to retest the lows. So seems like 2 areas on the chart for Ethereum, that 110 to 115, which is actually 118, 115 are my downside targets for my shorts. And when we look at XBT USD, for example, let's look at the daily chart. We kind of have that. We kind of have a similar location right here, which is this zone right down here below 3,300. Untapped area. Now you can make the argument of 3,500. Again, I see it as a possibility, but again, 3,500 was bought up here. It's been bought up too many times. I think that it's weakened. I think the area that has not been bought up extensively is right below 3,300. Again, if that area doesn't get bought up, we're going down below here. And to answer your question, Peter, for market orders, so coinfarm.online for aggressive BitMEX market orders, or the difference between how many market orders are long or short, and then CVD on Tensor Charts, which Bennett brought up earlier, if you want to see the difference between market buys and market sells. A graphical format. Let's see here. Thank you so much, Emmy. We got to be going here in just a couple minutes, guys. So if you got any last minute questions, throw them in there, man. We don't have Bennett on here all the time, guys. The one, the only, the Bitcoin Trading Challenge legend. While we're waiting for any questions to roll in, man, why don't you go ahead? Let all the links are in the description down below. But go ahead, plug yourself, man. Tell people where they can find you, what you got going on, how they can support you.
Great. So I am, as mentioned many times, I am a fellow YouTuber, Bitcoin Trading Challenge. You can find the link in the description of my channel below. Recently, I have just released my second guide on price action volume. And if you want to find ways that how to trade against how most retail traders are trading, how to hunt for their stop losses, how to hunt for where they're getting liquidated, and how to trade like a market maker, then you can check out the link to my price action guide called Gravity, how price gravitates away from most retail traders. Additionally, you can check out my Patreon where you can support me and vote on whatever video that you think I should be talking about next. And I also have a general Discord of about 3,600 members that you can come and chat on as well. And if you want mentoring, I also offer mentoring on my website, which is bitcointradingpractice.com. With that, thank you so much, Justin. I'm glad to be here, man, and trading analysis and learning some things about some chart patterns and other indicators that I typically don't look at. And yeah, this has been great, man.
Yeah.
Thank you for having me.
We're always very glad to have you on, man. It's always a pleasure, guys. Make sure you guys go check him out, man. Check out the Gravity Guide. Check out his Discord. It's a good place, man. Of course, if you guys want to follow along with Kraken Cryptocurrency, obviously all the links are in the description down below. If you guys want to trade along with our trade signals and setups, premium.krakencryptocurrency.com, as always, is at the top of the screen, and hop in discord.krakencryptocurrency.com to trade along with us live, guys. Let's see here. You guys should collaborate together again in the future. This is our number 2. Oh, and I don't know, Bennett, can we answer this in sync? That would be that would be magical if we could both say.
That'd be tough. What is it?
So somebody asks, what do you guys think about Elliott wave theory?
Oh, geez, I don't know if my answer's in sync. My answer's a little bit longer.
I'll make it. Hopefully it's the same as mine. If it's not, it's cool. But very, very briefly, that shit don't work, bro.
My take on it is I used to be a big fan of it about a year ago. And then I stopped using EWT a little bit. And one thing you can check out is a Wyckoff. So if you're looking for market theory, Wyckoff market theory is phenomenal. It's looking at liquidity grabs, liquidity pools, and ways that traders think. Elliott wave theory is a bit dated, but I still do believe that in a very long-term trend that you can find EWT to some success. Check out Wyckoff because I think that's phenomenal.
Yeah, that's actually where I started fundamentally, is from Wyckoff accumulation and distribution, markup, markdown phases. But with that said, guys, we have reached the time limit and we do got to be going. Bennett's got some stuff to do. I got some stuff to do. We're going to hang out in the members lounge. I don't know if we're going to be live on Twitch tonight at twitch.tv/Pylai, broadcasting live streams and trades as always, but you guys can't catch us in the Discord. We're going to be breaking it down tonight as Sunday night is. We're going to be rolling in the weekly candle close. And as we can see, the weekly candle has closed. And we are moving down, guys. So be careful, guys. All right, Bennett, thanks so much for joining me, man. You guys have been fantastic. If you guys have any questions, comments, thoughts, sarcastic remarks, and or death threats, leave them in the comments section down below. Of course, the death threats on Bennett's YouTube channel as well. Check it out, man. I'll catch you guys later, man. Peace out.
All right. Thanks for having me.
you.